Okay, so eyes up here. 10-3 deals with our general journal. Our general journal is used for anything that doesn't fit into a special journal. Our general journal does not have any special columns. We've used a general journal before in Chapter 9. Typically, your general journal is going to be used when you are recording a transaction with a memorandum. Okay? We have done a debit memorandum before, and we have done a memorandum before. A memorandum was one that we used when we said bought supplies on an account from Ace Hardware. Okay? What we have to remember now that we are using our special columns and we have this a controlling account called accounts receivable or accounts payable is in the past, if we ever wrote the words before accounts receivable / Fox Christian, now we do accounts receivable and then the slash there, and then we also have to make sure we put a slash in the post reference. Okay? Because we have an actual account called accounts receivable and an account called accounts payable, separate from what it was before, where we had one account called accounts receivable Don's Quality Market or accounts payable Don's Quality Market, we have to remember to do that. Now, today what we're going to talk about is we have customers. Customers are going to buy from us. They are going to be our accounts receivable. Sometimes customers buy things from us and then they don't want it and they want to return it. Have you ever done that? Right? Okay. So what we are going to do is when we deal with that, one second. The source document we're going to be using is a credit memorandum. Now think about it. What do we have to do to accounts receivable if a customer returns things to us? We have to credit our accounts receivable account. So when you see a CM for credit memorandum, the first thing that should pop in your mind is, hey, this is a customer and I'm crediting them. If you see a DM for a debit memorandum, that should be, this is a vendor or accounts payable and I have to debit them. And just a general memorandum, you have to read what's happening. But here's the thing, okay? So if Isaac came into my business and bought some merchandise on an account from me, and then he's returning items to me, I have to return the value of the product, the value of the sales tax, and then the total amount that he has due. So this is going to take 3 lines. No different than if you go to Kohl's and you return a pair of jeans. If the jeans were $40 and you paid cash to them, they're not going to give you just $40 back. They're going to give you $40 and let's say $7 in sales tax, and they would give you $47 back. They have to, a business has to account for the fact that we no longer owe that sales tax to them. So when we read that transaction on June 3rd, it reads, granted credit to Wilbanks and Associates for merchandise return, $457 plus sales tax of $36.56 from S356 for a total of $493.56. So again, accounts receivable needs to be affected, sales tax payable needs to be affected, and sales returns and allowances. We have a controlling account called sales, and below that we have 2 contra accounts that we use to keep track of what's happening in a business, sales discount and sales returns and allowances. We keep track of that because if we have a really high amount of products that are being returned to us, we need to figure out why. Have anyone ever asked you that question when you return to merchandise, like why you're returning it? Is it defective? Is it broken? You're not happy with it? They will go through and track that information because it may be, if it was broken, they need to find another vendor that they're going to get it from. Or if there was the wrong size, okay, maybe then it's not anything that they need to deal with, but they just need to track and maybe make sure that their labeling system is a little bit better on their merchandise carts for being able to go through and choose your products. So we keep track of all of products that our customers are returning to us in an account called sales returns and allowances. Sales has a credit balance. Sales returns and allowances would therefore have a debit balance because it's a contra account. We keep track of information that would take away from its original one. So let's go through and get this recorded. The date is going to be June 3rd of the current year. Now, we know that our accounts receivable, Wilbanks and Associates, is going to be credited because it is a credit memorandum. So we are going to have 2 debits. Our debits are going to be sales returns and allowances and sales tax payable. Applia will mark it wrong if you put them in the wrong order. It's picky. So we are going to do first sales returns and allowances. And this is going to be where we put in the amount of the product that the customer is returning to us. And Caden, since it was your birthday yesterday, right? Yeah, happy birthday a day late. What is the amount of the product that was being returned? Nope. You gave me the total amount, the product and the sales tax. So just the product is going to be $457. So that's going to be what I'm going to do as a debit, is $457. The next line that we have to put on is going to be sales tax payable. And I'm going to debit sales tax payable, the amount of the sales tax of the original product, and that's going to be $36.56. So I have 2 debits now. My third line is going to be my credit, and that's going to be accounts receivable / Wilbanks and Associates. And because I have a slash in the account title, I have to put a slash in the post reference. If you don't do that, it will be wrong. And then on this line, we're going to do a credit for the total amount of product and sales tax that Wilbanks and Associates is returning to us. And Caden, that's going to be the number that you gave us before, and that would be the $493.56. So Wilbanks and Associates no longer owes us that amount of money, $493.56, because they returned it to us. Now on June 6th, we have another transactions that reads, granted credit to Westfall High School for damaged merchandise, $67, no sales tax, from S345 Credit Memorandum 42. So basically this transaction will be done exactly the same, but because when they originally bought it, they didn't have to pay sales tax, I don't have to debit sales tax then. So I'm going to put the date of the 6th. I'm going to start with my sales returns and allowances. Source document is going to be CM42. I'm going to put in the value of the product that's returned, which is $67. Because originally, accounts receivable, Westfall High School did not need to pay sales tax. I don't have to put the amount of sales tax that's returned, so I just put $67 there. Just realize I have that set as graded. I don't really mean to have that set as graded. I will change that in just a moment. Go ahead and save and continue on that.